And here I was thinking it was going to be a nice, quiet start to the week down here in Slapstad. Anything but. Currency crisis, the Constitutional Court sharing Sean, and Esau Frankie hitting the wall. But I think we should start with that Rand story. The Rand was relatively hard hit today. I think since last Monday, it's been one of the worst performing currencies after the Turkish lira itself, down around 23%. And the Rand is usually one of the worst hit currencies in periods of risk off when it comes to emerging markets. But the weakness still seemed out of line with those of other emerging market risk currencies. If you look at a note out by RMB today saying that over the same period, the Argentinian peso has lost 5.4%, the Mexican peso 3.75%, and the Brazilian real, which often competes with the Rand as the world's most risk-sensitive currency, only down about 2.3%. Well, tonight, to make sense of it all, we've got Paulo de Almeida, Portfolio Manager at Sasfin, and Jameel Ahmad, Global Head of Currency Strategy at Forex Time. They're our market guys tonight. Evening, gents. Jameel, kick us off. The underperformance of the Rand will no doubt be attributed to local issues, land and governance issues, SOEs, but there are enough problems to which to allude. The Rand weakness does feel a little overdone.
Good evening, and thank you very much for having me. Typically speaking, these local issues are more domestic problems for South Africa. When it comes to what's driving the Rand, it's very much these external headwinds and the market environment. Typically, this was the biggest move in the South African Rand for approximately 1 decade. And what's happened is the global markets have really woken up to what is a currency crisis in Turkey. And despite it being very astonishing weakness, what's happened in the lira over recent sessions, investor sentiment is very low. It's quite possible that this Turkish lira crisis will continue, which means as a matter of less attraction towards risk, our higher yielding assets could continue to be hit. And this is negative news for the South African Rand because it will be impacted by the contagion and the knock-on effect of the Turkish lira crisis.
And we'll go on to where to now for Turkey, because I think that is the canary or the turkey in this particular emerging market coal mine. But Paolo, how do you see what happened with the currency early this morning? If you look at it, it was early in Asian trade. It was around about, I think, 1:30 South African time, which is when I was up with my 1-year-old who's teething at the moment. But it looked to be a bit of a fat finger incident because it was an Asian trade, and it's obviously on thin volumes over in Asia. And when we see what happened with Nenegate, much was made about a brief Rand spike to around 1780. That was back in January of 2016, but it came back quite quickly. How are you reading it this time round?
Marco, you're right. Just as you were up with your toddler, I was going to bed after watching some very good golf. But that Rand at 1550, I do certainly think that, this is a time in the market where there isn't a lot of liquidity, and I think that trade was done in a very liquid market that sent the Rand to 1550. We've seen it pull back quite considerably over the course of the day, 14 Rand 50 where we are about now. But, a point to make is that South Africa is very fortunate in that we have very deep and liquid markets. So when we tend to see the Rand whipsaw like we do today, I think you do tend to see institutional investors around the world, when they start to exit emerging markets and punish emerging markets, the Rand tends to get caught in this more than its other peers, such as the Brazilian real and the Turkish and the Russian ruble. Going forward from here, it's difficult. These emerging markets, these issues tend to weigh on the market for quite some time. But I think the point to make is that we aren't a Turkey. Our market has some issues. We certainly have issues such as land expropriation and pressures on our state-owned enterprises. But if you look at our market, we have a very good central bank that's willing to lift rates. In Turkey, for instance, since we've seen the lira literally collapse, we've yet to see the central bank actually lift rates there. The president's very, very strict and very stern on what the monetary policy is doing in that country. So I don't think we can be painted with the same brush. So to me, I think this is a little bit overdone.
On that note, Jameel, if you look at what needs to happen here, I think all eyes are going to be turning to the Turkish authorities. As Paulo said, they've been unwilling to take the tough medicine needed, most importantly rate hikes, to really turn the market around. Are you eyeing that as the next key macro indicator out of Turkey to establish what happens next?
Well, the problem is that President Erdogan is so outspokenly negative on higher interest rates in Turkey. I can't remember the exact comments he's made in the past, but there's been several. And specifically, he did say quite outright that if he did win the election, which was last month, actually this was the end of June, sorry, that he would begin exerting more pressure on monetary policy and economic matters within Turkey. And one of the main contributors behind this astonishing weakness in the Turkish lira leading up to the recent currency crisis is concerns that the central bank has its hands tied, that they're not independent anymore, and that in the most recent interest rate monetary policy meeting, there wasn't an interest rate increase because quite possibly President Erdogan is influencing things away from the scenes, and this is going to continue to weigh on investor sentiment as well. There's such limited attraction towards buying the Turkish lira, even at its current levels, that the South African rand, our emerging markets, our higher yielding assets are going to remain at risk to these headwinds. So what I would say is that these domestic negotiations that are going on in South Africa right now with the land, it's a very big thing for South Africa, but when it comes to what's developing the external market and what's impacting the rand, it is like the Turkish lira crisis. You've got the global trade war headlines, you've got a significantly stronger dollar, and this is really what's manipulating the currency right now.
And important for investors to be well aware of that, Paolo, in that a lot of this is offshore, it's international in nature, and sometimes we do tend to focus on our own issues, our own debates around the land crisis for one, and react based on that. That said, though, Paolo, I think important lessons. We're having a conversation here about the independence of our Reserve Bank. Will the SARB be nationalized? What impact might that have on its independence and credibility? And we can see exactly what does happen when you interfere with the independence of such a key institution. Paolo, the one question I'm fielding from listeners is what to buy in this market. Rand hedges perform well when the currency weakens, but there are few of them on the JSE. Are there any particular Rand hedges that you like and that you've been invested in for some time?
Michael, it always is a difficult question to ask at what to buy. With the JSE that you're seeing considerable pressure on this market. If you look at just SA Inc. and you see the pressure that you see on our local shares with no earnings, GDP growth really, really slowing, that really, you battle to see earnings growth. Prospects overseas seem to be a lot more attractive. And I think it's important to mention diversification, not to have all your eggs in one basket, not everything in just SA Inc. and not everything offshore. You need a balance. But there are certainly some good offshore shares that I think are worth looking at. British American Tobacco, I think, over the last couple of months has been very, very hit, and I think it's exceptionally overdone. I think at current valuation levels it's showing a quite attractive return. And the thing is that this business offers a very strong free cash flow yield, very strong free cash flow. But a lot of the offshore shares are showing this. Anheuser-Busch is another one. Now, although it has quite a lofty debt level, the company is producing a substantial amount of cash. But I think the point to make is it needs to be balanced. So you need to have exposure to local assets, especially if you live here, but you also need to have some of your money offshore on days where you see the rand go to 15.50 at 3 o'clock in the morning.
Well, it really is frightening. I was boarding the plane at the time, watching my Twitter feed in disbelief. Jameel, your advice to investors at a time like this, I'm not talking currency traders who are trying to look at taking positions, but investors, I suppose the one concern for an investor is from a short-term or even a medium-term perspective is whether this current contagion around emerging market risk becomes self-fulfilling, and with fear generating more fear, that might trigger more sell-offs and actually be negative for global growth.
Well, I do think that the Turkish lira crisis is certainly a very severe risk for the financial markets, and it needs to be considered very heavily from investors and also for everyday people to be aware of this, because this is probably a bigger risk to Europe and so on the major financial markets, probably bigger than Greece. It could be bigger than, other markets that have been at risk to default in the past as well. But what I really, really would monitor right now is the global trade war tensions, because this is the biggest risk since the global financial crisis in 2018. But there is a ray of sunshine somewhere, that the dollar is continuing to get stronger. It's getting so much stronger that it's hurting all other currencies, and this is a problem. However, it's certainly something that President Trump does not want. He's been very outspoken about this in the past, so I do think at some point the dollar would get weaker. Don't know exactly when, which will be more positive for the South African rand and for our emerging markets as well.
Well done on extracting some of the silver lining to what is a very dark cloud on this Monday. Paolo, from the Sasfin question that you tweeted out this morning, obviously our rand plunging to a 2-year low is a big issue, but the other headline that's going to be dominating this week is the zero rating of certain goods from a VAT front. Locally, we've got white bread and flour, cake flour. We've got sanitary products, nappies. I'm very happy about the nappies, and school uniforms recommended for zero rating. That'll obviously have some flow through onto listed equities, food producers, your FMCG producers. But I think more concerning for investors right now would be what impact is this going to have on our own Reserve Bank's monetary policy stance? Do we see the potential now for rate hikes perhaps sooner than we had initially anticipated?
Michael, that is such a tough question. To break it down, in terms of the VAT, I think it's good to see, it's such a hard tax to put on a population. It really impacts the poor more than anyone else. So I think to see relief on a few of those items, I think is very positive from a consumer point of view. I was disappointed not to see chicken on there. Given the industry, the struggling in the industry there, and it's a very cheap source of protein, I was very disappointed not to see that on the list. But then, from a fiscus point of view, not from a consumer point of view, I think it also creates a risk to our fiscus. If you look at the VAT, we've actually been collecting, personal tax we've been collecting, company tax we've been collecting. It's starting to actually come in under budget, and I think that presents quite a risk for the fiscus, and I think that will be very closely watched by credit agencies. In terms of the central bank, what they can do, it's a very tough spot our central bank is in. If you continue to see the rand weaken as we have seen today, this has to, for instance, continue over the next month, 2 months. I think the central bank has to put up rates, to protect our currency and to protect the consumer. But the important point I think worth mentioning is just there is a lot of pressure on the consumer, and I think you're seeing that play through. If you look at, we've had a VAT increase, you can see fuel prices going up, maize prices are starting to pick up, which I think could also be a concern. So the central bank, it's in a very tough spot. If the currency continues to weaken like this, I think the next step in rates will be up rather than down.
Might well be, and if you look at the big macro data points out this week, we've got obviously mining production quite lumpy, but retail sales for June, and I think all eyes going to be on those retail numbers with our mining and manufacturing numbers disappointing so far, an important indicator as to whether or not we are going to narrowly avoid that decline in the second quarter. Jameel, from a technical perspective, what are the resistance levels of the rand that you're watching against the dollar?
Well, that's a good question, because I'm just looking at the chart, and what I can see is that the rand did strengthen significantly from what is astonishing weakness. At time of speaking right now, it's only down about 1.8%. So overall, after the initial shock, the day has not been so negative for the South African rand. However, as a technical trader, I could say that the rand breaching this 14 level against the US dollar is a technical signal that the rand is still susceptible to more weakness. So if we do drop below 14 level, this will be more positive for the rand to recover from 2 days of heavy weakness, including Friday's trading as well.
And then finally, Paolo, pulp and paper maker Sappi reported a 12% drop in its quarterly profits. It cited a rise in capex, and that drove up depreciation costs. It's one of the leading down movers on the day, down over 8%. But it is one packaging company that should actually benefit from the war on plastics in the medium term.
100%. If you look at Sappi's results and you look at the actual results, and you mentioned it was down 9%, it was a drastic move. But what you're starting to see is just companies that are just disappointing on the earnings front tend to get hit with proper losses. Right? I'll just have to point you to MTN. I think it was last week, we fell 8% on disappointing numbers.
Price for perfection, yeah.
But if you look at Sappi's results, a couple of things that are playing through there. The demand for the product is still there, so that's fine. But what impacted results is a couple of things. Earnings were a lot weaker than what the market anticipated, and the market tends to take these analyst forecasts they tend to take them as quite important. So when a number tends to miss those, you tend to see the share sell off quite a bit. But you mentioned it there. Increasing capex means less free cash flow. The market wasn't happy about that. This quarter also has a lot of maintenance, and they actually make the comment that maintenance ran longer than expected, and that you can see in the numbers. So that also, I think, was the main reason why the share was
right.
down. Another thing is that...
Paulo, I'm sorry, I'm going to have to stop you right there because we've got to maintain our schedule this side, but it just shows you that management really have to deliver on their guidance, and when they do miss in this market, the consequences can be catastrophic for the share price. Paulo de Almeida, Portfolio Manager at Sasfin, and Jameel Ahmad, Global Head of Currency Strategy at FXTM.